It has begun. The silver shortage everyone warned about is no longer theoretical. It's here, it's documented, and it's accelerating. 820 million ounces of silver have disappeared from global inventories since 2021. That's not a typo. 820 million ounces, 82% of annual global mine production, gone in 5 years. The Silver Institute just confirmed 2025 will be the 5th consecutive year of supply deficit. 5 straight years where demand exceeded supply by an average of 164 million ounces annually. This isn't a temporary blip. 5 consecutive deficits signal structural shortage. Above-ground stockpiles that sustained the market for decades are nearly depleted. And when they're gone, when there's no buffer left, price discovery becomes violent. In the next 5 minutes, I'll show you exactly where the 820 million ounces went, why the 5th deficit is the critical inflection point, who's accumulating physical silver right now, and the timeline to when shortage becomes crisis, because this is no longer if, it's when. And it has begun. If you've been hearing about silver deficits for years and wondering when the shortage actually materializes, you're asking the right question. Because deficits have been masked by above-ground stockpiles, until now. A deficit means demand exceeds new supply. In 2024, global silver demand was 1.21 billion ounces. Mine, production plus recycling supplied 1.03 billion ounces. Deficit, 180 million ounces. That shortfall was filled by drawing down existing inventories, silver held in warehouses, vaults, ETFs, and government stockpiles accumulated over decades. Think of it like a savings account. If you earn $50,000 a year but spend $60,000, you run a $10,000 deficit. You cover it by withdrawing from savings. But if you do this 5 years straight, your savings account approaches zero. That's where silver is now. The Silver Institute estimates identifiable above-ground silver inventories stood at approximately 2.5 billion ounces in 2020. After 5 consecutive deficits totaling 820 million ounces, inventories are down to roughly 1.68 billion ounces, a 33% decline. And much of that remaining silver is locked in jewelry, silverware, industrial products, or coins bars held by investors who won't sell. Available for delivery silver, the metal actually accessible to industrial users and investors, is far lower. Some analysts estimate it's below 500 million ounces globally. That's less than 6 months of current demand. When it's gone, there's no buffer. Shortages become immediate. Prices spike. So where did 820 million ounces go? Who consumed the deficit? Segment number 1, industrial fabrication, 420 million ounces. Solar panels, electronics, 5G infrastructure, EVs. This silver is consumed, melted, alloyed, embedded in products. It's not coming back. Solar alone absorbed an estimated 200 million ounces from 2021-2025. 40 Oz year growing to 60 Oz year. Solar demand is projected to hit 150 million Oz year by 2030 as installations triple. Segment number 2, investment demand, physical bars and coins, 280 million ounces. Retail investors, central banks, some have quietly added silver, high net worth individuals. This silver is held, not consumed, but it's removed from the market. Owners won't sell at 28 or 32 Oz when they believe it's going to $50 to $100. This is strong hands metal. Segment number 3, photography and other traditional uses, 45 million ounces. Though declining, silver is still used in medical imaging, mirrors, and specialized photography. Once used, it's mostly unrecoverable. Segment number 4, net drain from ETFs and exchanges, 75 million ounces. While some investors sold ETF holdings, more withdrew physical metal from COMEX and LBMA vaults. Registered COMEX, silver declined from 136 Oz 2023 to 98 Oz 2025. LBMA vaults also saw net outflows as buyers took delivery. Total 420, 280, 45, 75, 420 million ounces. This is documented demand that exceeded new supply. And the trends are accelerating. Solar demand growing 15% year, EV production up 20% year, investment demand surging post-2024 as inflation persists. The deficit isn't shrinking, it's widening. Why is the 5th consecutive deficit the critical threshold? Because history shows commodity shortages follow a pattern: denial, acknowledgement, panic. Precedent number 1, palladium, 2000-2008. Palladium, used in catalytic converters, ran deficits 6 consecutive years, 2000-2005, as auto production surged. In Russia, 70% of supply reduced exports. Price went from $300 Oz 1999 to 1,090 Oz 2001, a 263% spike in 18 months. Then crashed as recession hit, but structurally remained elevated. By 2008, it was 370, then surged again to 3,000 plus by 2021 as EV demand grew. Precedent number 2, copper, 2003-2008. Copper ran 5 straight deficits as China's infrastructure boom exceeded mine supply. Price went from $0.70 LB 2003 to $4 LB 2008, a 471% increase over 5 years. Shortages persisted until a recession destroyed demand temporarily. Precedent number 3, uranium, 2003-2007. Nuclear power demand growth created uranium deficits. Price surged from $10 LB 2003 to $140 LB 2007, a 1,300% increase in 4 years. Spot shortages forced utilities to pay any price. Pattern: the first 1-2 years of deficit, markets ignore it, temporary they think. Years 3 to 4, acknowledgement phase, some investors accumulate. Year 5 plus, panic phase as inventories visibly deplete and industrial users scramble to secure supply. Prices spike violently. Silver is entering year 5. The acknowledgement phase is ending. Panic phase begins when COMEX registered inventory drops below 50 mmHg, currently 98 mets, or when a major industrial buyer can't source metal. We're 6 to now sort of 18 months from that threshold. So who's accumulating the 820 million ounces that disappeared? Industrial users stockpiling. Solar manufacturers like LONGi, JA Solar, and Trina Solar are forward buying silver to lock in supply. They learned from the 2021 semiconductor shortage. Don't rely on spot markets during shortages. Reports indicate major solar companies have 6 to 12 months of silver inventory, double the normal 2 to 3 months. That's 40-60 million ounces locked in corporate stockpiles. Governments quietly accumulating. While central banks focus on gold, some are adding silver. China's State Reserves Bureau doesn't publish silver holdings, but trade data shows China imported 6,200 tons of silver in 2023, 200 million Oz, 30% above 2022 levels. Much of this likely went to state reserves. Russia also holds undisclosed silver reserves. Retail investors, strong hands. The Wall Street Silver Reddit community alone has 240,000 plus members actively buying physical silver monthly. U.S. Mint reported American Silver Eagle sales, 24.9 million coins in 2023, 23.6 million in 2024. That's 48 million Oz absorbed by retail just in Eagles. Add Maples, generic rounds, bars. Retail took 80 to 100 million Oz annually. Institutional accumulation, hedge funds, family offices. David Einhorn, Greenlight Capital, disclosed long silver positions in 2020-2021. Eric Sprott's funds hold 60 plus million Oz through PSLV, Sprott Physical Silver Trust. These are patient capital allocations, not trading positions. The hoarding pattern. Once shortage psychology sets in, it's self-reinforcing. Industrial users overorder to ensure supply. Investors buy expecting higher prices. Governments secure strategic reserves. Velocity of available silver drops. The 1.68 billion Oz of remaining inventory is increasingly illiquid. When does shortage become crisis? When the buffer is exhausted. Current state identifiable inventories tracks 1.68 billion Oz annual deficit, a 180 million Oz 2024 pace. Available for delivery silver, Gino to 500 million Oz estimated. 2025 projection, deficit widens 200 million Oz as solar demand grows 15%, EV production grows 20%. Available inventory drops to 300 million Oz by end of year. 2026 projection, deficit 220 million Aussie. Available inventory drops to 90 million Aussie, barely enough for 1/4 of industrial demand. COMEX registered inventory likely below 50 million Oz by Q3 2026. First delivery failures possible, 2027. Crisis threshold. Available inventory, 50 million Oz. Spot shortages for industrial users. Premiums on now. Physical silver spike to 30-50% over spot. Paper silver, futures, unallocated accounts, decouples from physical. Price enters discovery, $50, $70, 100 pluses as industrial users bid for scarce supply. This timeline assumes deficits continue at current pace and no supply surge. New mines take 7 to 10 years to develop. Recycling can't ramp fast enough. The math is unforgiving. What I'm about to show you next, the supply side impossibilities, why production can't save us, the 3 trigger events that accelerate the timeline, and your exact positioning strategy. Because it has begun, and you're still early. Can supply grow fast enough to close the deficit? No, here's why. Constraint number 1. Silver is mostly a byproduct. 72% of silver comes as a byproduct of mining other metals. Copper, 28%, lead zinc, 24%, gold, 20%. Only 28% comes from primary silver mines. This means silver production is tied to copper, lead, and zinc prices, not silver prices. If copper prices don't justify mining, silver production suffers even if silver hits $50 Oz. Miners optimize for the primary metal. During 2014-2016 commodity downturn, many copper, lead, ash, zinc mines closed. Silver production fell from 886 M Oz 2015 to 854 M Oz 2016, despite silver being 1520 at an Oz. Constraint number 2, long lead times. Bringing a new silver mine online takes 7 to 10 years. Exploration, 2-3 years. Permitting, 2-4 years. Construction, 2-3 years. Even if companies started today, new supply wouldn't hit markets until 2032-2035. The deficit is happening 2025-2027. Constraint number 3, declining ore grades. Silver ore grades, amount of silver per ton of ore, have declined 30% globally over the past 20 years. Mining the same amount of silver requires processing more ore, which costs more and takes longer. Primary silver mines in Mexico, world's number 1 producer, are seeing grades drop from 200, 300 G ton to 150, 200 G ton. Constraint number 4, recycling is already maxed. Recycling provides 180 million Oz year, mostly from industrial scrap and old jewelry, but much silver in electronics and solar panels is economically unrecoverable, costs more to extract than silver is worth. Recycling can't grow significantly without prices hitting $50 to $70 Oz to justify the effort. Bottom line, supply is structurally capped at 1.03 billion Oz a year for the next 5+ years. Demand is 1.21 billion Oz a year and growing. The deficit won't close through supply growth. It closes through demand destruction, recession, solar industry collapse, or price spike rationing through cost. What could accelerate the shortage timeline? 3 potential triggers. Trigger number 1, COMEX delivery failure. If COMEX registered inventory drops below 40 Oz, currently 98 MA, and multiple large buyers demand physical delivery simultaneously, the exchange may not have metal to deliver. This forces cash settlement or rule changes, Hunt Brothers 1980 playbook. Loss of confidence in paper. Silver causes investors to flee to physical, spiking premiums 40-60%. Timeline, possible Q3, Q4, 2026 if current drain rate continues. Trigger number 2, major industrial buyer unable to source metal. Imagine Tesla or a major solar company publicly announcing they can't secure silver supply for Q3 2026 production. Headlines, EV production halted due to silver shortage. Panic buying ensues. Every industrial user tries to forward buy 12 months of inventory. Spot silver gaps up 20-30% overnight. Trigger number 3, government strategic reserve announcement. If China, US, or EU announces building strategic silver reserves like they have for lithium, rare earths, it signals official acknowledgement of shortage. Governments competing for supply would absorb 100 and 200 million Oz a year, doubling the deficit. Price would spike immediately on the news. 820 million ounces gone. 5th consecutive deficit. Available supply approaching critical levels. It has begun? What do you do? Strategy number 1. Accumulate physical silver aggressively 2025-2026. Target 100 to 500 O's depending on portfolio. Size. American Eagles, Canadian Maples, 10 ounce O's bars. Buy 500, 1,000 a month consistently. Don't wait for the dip. The deficit is the signal. Current premiums 3 or 4 over spot will look cheap when they hit 8 to 12s in 2026. Strategy number 2, allocated storage only. If using vaults, ensure allocated, you own specific bars. Not unallocated, you're a creditor. Unallocated accounts failed during 2008 crisis. Bullion vault, Sprott, PSLV, or take-home delivery. Strategy number 3, silver miners as leverage, speculative. Primary silver miners, PAS, HL, MAG, FSM, offer 5x leverage to silver price. If silver goes $30 to $60, miners go 3-5x. But they're volatile. Only allocate 10 to 15% of silver position to miners. Strategy number 4, monitor trigger thresholds. Watch COMEX registered inventory monthly, cmegroup.com. If drops below 60 Oz, shortage is imminent. Watch industrial news. Any mention of silver supply constraints is your signal to accelerate buying. Timeline positioning. 2025, accumulation phase, prices 27.35. 2026, shortage recognition, Prices $35.50. 2027, crisis discovery, prices 50 or 100 plus. You're in the accumulation phase. The people who will regret not buying are those who wait for $20 silver that never comes. 5 consecutive deficits. 820 million ounces gone. Supply can't catch up. Shortage is mathematical certainty. Full Silver Institute data, supply-demand charts, and inventory tracking linked below. Educational content, not financial advice. But it has begun, and you're still early.